There were over $40 million worth of XPX calls added today. And not only were they calls, they were quite a bit out the money. You can see here 4,550 strike, 4,650, and even a 4,800 strike for 2.7 million premium. So it seems like bulls continuously are hitting the tape with these high premium out the money calls. And these are only for the January expiration. We've been seeing this now. If you've been watching the videos, we've been seeing this for a couple weeks straight where there's just a relentless amount. You can see even later in the session, and this is just from today alone, which is even crazier. If I go over to here to the chart, well, first you can see QQQ almost hit its high of year today. That's insane. But if I go over here to XPX, which we're just talking about, you can see we're all the way up at 4,500, and they're still adding these calls all the way up here around 4,500. And again, these are quite a bit out the money, especially this 4,800. That would be all-time highs, or just about all-time highs if we did hit that or get near that strike. So pretty insane that there's still this much bullish emphasis behind it. But again, if you have been watching this channel, I was looking for a very large rally with a 4,700 target on that, even when we were down around the low 4,200s as well as into the 4,100s. And now we're really starting to see that rally catch even more of a bid, and we're getting closer and closer to my target that I've had. And again, that target was only supposed to be by February of 2024. We are getting very close soon. But what's interesting is, and what I want to talk about in this video, is there's potential that we could see a little bit of a pullback off of here. It's not something I'm going to short. I want to make that very clear here. I am currently holding long positions even throughout all of this rally. I trimmed recently. However, I'm still holding a long position to that 4,700 price target. Again, since that is my target. But regardless, I'm not interested in shorting for a pullback. This is a very impulsive and aggressive rally to the upside. You do not want to short against the trend. My rule until February is I'm not going to take a swing short setup at all. I'm really only looking for any substantial dips to just add exposure or just add a tactical long setup. This would be the case if we were to have some type of a miniature pullback to around 4,450-ish. That's my ideal target. Could be a little bit higher on this low of day from Tuesday earlier this week, like 4,460. I would take that as a tactical long. There is a window between Thursday, so tomorrow, into Monday, so that Monday after OpEx. There's a window for this to happen. It doesn't have to, especially with how strong everything has been so far. However, I'm just alerting you guys this because if it does occur, then it is an opportunity to add long exposure, which would be yet again for an additional upside move to around 4,550, 4,575 before flattening out a bit as it preps for its next leg up after that, which would be to 4,700 to hit my final target. So that's what I'm looking for. Again, you're going to want to see it happen within the next couple sessions if there is going to be a pullback. And one other thing you do want to see, if I go to the 15-minute chart here, is actually two things. You want to see a break below where we had this flat bottom reversal. If you're familiar with my work, you know I am a big fan of flat bottom reversals on the 15-minute chart. It's actually a term that I coined myself. You can see we had a characteristically bearish candle here on the 15-minute that was followed by upside without even much of a wick under right after that 15-minute candle, and it closed right above or near the top of that previous candle. I consider this to be a flat bottom reversal, and they almost always are a precursor to a rally afterwards. And we did see that rally a little bit later into this session. Not too much in this case. Typically, it is a bit more. However, we do want to see a break below roughly 4,495 in order to warrant a little bit more downside to 4,490. So very tight range in this case. 4,490 though, that's the level to watch, especially if we are able to break below this. Then we will see that mini pullback thesis occur, where I do expect there to be some form of a bottom around 4,450 to 4,460, and I will take a tactical long position from there that is separate from my existing long position with a 4,700 price target. I'll likely add shorter term contracts on that for an upside move up into the mid 4,500. So that's my plan. Again, it doesn't have to happen. We're already squeezing a bunch of shorts within the last couple weeks so far, so it can just continue and the train can continue to chug along without taking any more passengers. But I just wanted to alert you guys that there is an opportunity if it does end up taking it here with OpEx approaching. Regardless of the option the market chooses though, we will continue to go up from here. So that is something that I'm looking at. Another thing I am looking at right now is how beautiful this Tesla setup is. I know I have a couple lines on here, but this is something that I want to review with you guys because it's such a textbook, not only inverse head and shoulders setup, because you can see the left shoulder, the head, and then the right shoulder here, and then obviously this breakout afterwards, but also a beautiful golden pocket test that ended up being a large bounce zone. So basically what I'm looking at here is one, we have the golden pocket. This is Fibonacci based, so you can drag a fib sequence from where this low is over here to this high or vice versa, depending on the trend. And in this case, the golden pocket, which is right around this 0.5, roughly this green range you can see here, but most ideally the 0.5 to 0.618 range. You can see we did go into this range. We formed an inverse head and shoulders pattern in the golden pocket. That's about as bullish as you can get, especially for a ticker like Tesla. And the fact that it had such a bullish setup here with multiple variables, which is always what I am looking for. I never want to base a trade just on one variable. I want to look at multiple ones. And you can see here, we have a characteristically bullish setup paired with the golden pocket on the daily for Fibonacci. And you can see a huge breakout afterwards. I would expect this to continue a lot higher from here. Now we are within the breakout right now. So the best entry was over here on both of these days, Thursday of last week and Friday. However, we do have a resistance right here from this trend line. This actually goes back for quite a while. And you can see we've had numerous rejections off of it from over here, as well as back here on this daily candle. As long as it remains above this trend line, kind of like how it closed today, it has bullish emphasis to continue upwards. Now you want to make sure your risk is tight. Again, we are breaking out right now, and it is probably getting close to overbought levels. I actually haven't checked the RSI recently, but on a shorter term time frame, it's probably getting near those overbought levels. So you do have to be careful. And if we can go to the 15-minute chart here, I can give you a setup actually. What I'd be looking for at this point would be either a retest of this level or just adding around 240 for calls. And you can use the 1 hour candle as your risk. So basically a 1 hour close below this blue trend line, which is roughly at 238 right now. That would mean a cut. That'd be your risk. Like I just said, otherwise, if it's able to base around here, it can continue up and basically just melt up to the 250s, where I do expect it to pause around the mid 250s. So right now it's very strong. This would be more so of a day trade setup to add that could turn into a swing. Typically you don't want to mix both of those, but in this case, I like it because you're able to mitigate your risk a lot more in this way. But anything around this 240 range looks good in terms of risk reward. Again, you want to keep a tight stop on this because it's in breakout mode. So have a day trader mindset to this entry and potential exit if there is a stop out. Otherwise, again, I do see it continuing up to the 250s. It's only a matter of if it wants to even give a pullback, one, but then two, if it's able to hold above here before continuing up to the mid 250s. So regardless, this looks very strong. And like I said earlier, SPX continues to look strong. Even if it wants to have a minor pullback here, we can see upside to the mid 4,500s going forward. And lastly, like I shared earlier in this video, QQQ looks amazing at the moment. We had that key break that I was referencing in a previous video not that long ago from over here, key trend line break. Not only is this a downtrend breakout that we saw, I want you guys to pay attention to this. This is also a massive cup and handle breakout. That was also a fake out, as you can see here, because it faked out to the downside and then just ripped to the upside afterwards. We have a massive cup, as you can see right here, and a handle that is now breaking out. Target of this, believe it or not, would be all-time highs afterwards. So really what we have to get past at the moment would be about 388 to 390. If it can do that, then we're going to see 400s soon after that. So very bullish at the moment. And yeah, the market is overextended, especially if you use something like RSI. It's going to be overbought on the daily. However, it looks very strong. And this is the move, again, that I was expecting for the market with that target that I provided of SPX 4,700 plus by February. So it's a very quick move so far, but I like what I see. And I have no reason to be shorting it anytime soon, at least through the end of the year. So other than that, as always, appreciate you guys watching this video, and I'll see you next time.